Good morning.
Morning. Welcome back.
Yeah, glad to be here.
Yeah. So I had this question to make this episode, and I thought I think it'd be valuable for people to know what are some of the top common questions that business owners have when they're looking to buy a commercial building as they're looking to expand. And I thought, why don't we just ask ChatGPT?
Yeah, I
What do you think?
It's a great idea.
You want to do it?
Yeah,
All right,
absolutely.
let's do it. Let's see what ChatGPT has to say, because it's sort of like asking the peanut gallery. You know, like, what do you guys think?
Okay.
We'll see.
All right. What's the question?
The top three common questions business owners have when they're making something like that.
What are the top three questions business owners ask the bank when they buy a commercial property?
Yeah.
Okay.
See what it has to say.
Generating. Okay. Got it. We'll go through the first one. When the business owners are buying a commercial property,
nice.
They typically ask the bank the following three questions. Look at that. Number one, what types of commercial property loans do you offer? Yes. That is a very common question.
Probably the most common.
They ask. Yes, because they, commercial, industrial, retail locations. I mean, that is a very common question. So there are banks that, won't touch industrial. Yeah. Or if you do industrial, what is the typical loan to value that the banks will only go to?
Yeah.
Owner-occupied commercial, office. Office now, there's probably going to be a lot of regional banks that are going to stay the heck away from office sectors at the moment, especially northern, major office sectors and major cities or they could be like, no, we're not doing that. So yes, that is a good one to ask.
What do you guys like to do at Surety?
I hate that question we'll look at anything and if it fits and is right for that, because that's
so you're not
what I
believe.
You're not
niched out.
No, we look at our concentrations and we're not overly weighted into a sector. Yeah. And then if we have, exceed 100% of our capital in a sector or 50%, depending on what it is, we'll analyze and say, do we want to keep loaning to the sector? And if we do, how's it performed?
Right. And I've seen you guys loan everything from gas stations to professional buildings.
No, it's, it makes sense. I'd like to look at the individual case. Yeah. And that is wonderful, and that is the difference between a community bank and a major bank. Yeah. A larger bank, you fit into this or you don't. Mm-hmm. I hate that mindset, but
it's a foreshadowing to service.
Yes. The second one, what are the interest rates and terms for commercial property loans? That's good because so many people, it's their first commercial. They're used to a 30-year fixed rate. Yeah. And listen, you're not getting a 30-year fixed rate on commercial. Yeah. It's not the same paper. Mm-hmm. When you're buying that 30-year fixed rate mortgage, banks are selling that. That may close in your bank's name, but that's going to be sold at some point. They have availability to sell that because we don't have crystal balls. And nobody's depositing money here for 30-year fixed rates. Yeah. So, if I post on the sign right now, let's say residential 30-year fixed rate right now, 7%, which everybody's going to say, oh my goodness, that is the high as can be. Well, it is high to what it has been the last decade, but right.
It's
no, 30 years, 7%, really, that's not. Yeah. So for me to have the spread, I'm going to go put a 30-year CD at 3%. Mm-hmm. How many takers do you think are going to come out on that one?
Yeah, I mean,
none. Yeah. So we can get 1 year money at 4% and 5%. Yeah. So you got to match funds. So those are insured and those are backed by government agencies for a 30-year fixed rate. It's not the bank. They'll temporarily fund it with their equity and then usually sell it off to servicing center that it's guaranteed and sold in bonds. Yep. It just does not, you can't keep it on your books forever. Yeah. It is bad interest rate risk. That's what all the banks went under in the 80s. Mm-hmm. So it's bad. So yes, commercial, typically rates are fixed for 5 years. Okay. And then after that, a lot of banks balloon them and a lot will float them with, different rates to build in the protection.
It makes sense too when you think about it, kind of as a lay person, because with a 30-year, you're going to be in your house. Most people move, but like the idea is that that's where you're going to live. So you're going to be there for a long time. With a business, the trajectory of growth is different. Market trends go up and down, so a shorter time frame is what you're working on anyways, as a mindset. So that makes sense.
Yeah. So that's a great second question. Because you need to understand the rates, loans, durations, and what potentially how it could go up after the fact.
Yeah. And, I think to expound on that, you talking about understanding that starts the conversation with like what I would, a business owner has a partner in a bank, like, the bank should really become a partner in the business because that conversation should continue in deeper, should be talking more about not only understanding the rates, but like, okay, well, what is this? How does this play into type of buildings you're looking at, or
right now,
of your business?
Commercial loans that were done 5 years ago and their price resetting, it's a huge jump. It's a big jump. So notifications go out months ahead of time to let them know the pricing changing, and you'd be surprised. A lot of people don't pay attention to that notice, and it's like, are you kidding me?
All of a sudden,
I would be focusing on that, and there's a good reason why the rates went up. Costs went up. Yeah, get it. But hopefully, and that could be impactful to the nation as that continues over the next few years. As the rates, they've been higher for a year now, but let's go, 2, 3, 4, 5 years. Yeah, you'll see all the commercial resets, and I'm even paying attention to the businesses that we do business together, whether it's we're buying equipment or software or long-going extended contracts, and it's not a one-time purchase. We're looking at their financial ability, and if they've got a lot of debt out there, I'm asking the question: when does that reprice, and can they afford it? Yeah, because I want to deal with vendors that are responsible.
Yeah, that's smart.
Third, what are the eligibility criteria and documentation requirements?
Okay.
Yeah.
What does it take to?
That's a great one.
To get a loan.
I got to fill out an application.
Yeah. Well,
you'd be surprised.
Yeah.
I'm having calls today and they're talking about loan. It was like, you sent us projections on what you're going to do. We asked for you to sign the application, and we to how much money you actually want, not just your projection of growth.
So you're saying some people just don't even fill out an application?
No kidding.
They just think that you're going to just give them a loan. Like,
I don't know. And here's the application.
Yeah. There's a process you have to walk through with most things in life. And I mean, how do you expect to go to the next step without?
And you would see, I've major companies that have can you sign the application? Like, that gives authorizations to pull credits. Yes. It gives authorizations to do things, that's a trigger. It's a trigger.
It's a good filter.
Yeah. So, eligibility criteria. And that's good because they can tell them here, commercial, owner occupied, we can go up to 85% of the current value or purchase price. Okay. Or, some banks may exceed the purchase value on their loan to value. They'll look at appraised value. That's probably bad underwriting, but, to each their own. So yes, that is great. You need to know the eligibility requirement. I mean, know whether or not you're wasting your immediate time. Yeah. And see if you need to kind of see if you qualify yourself, because if you get something back, at least you can intelligently discuss your point and say, okay, well, I was seeing this. How are you seeing this debt service coverage? Right. What am I missing here?
Yeah, that sparks another good conversation.
And it could come and say, I had that one-time expense this year. I will never have that one-time expense. So if we deduct that, I cash flow perfectly. I'm not going to have that, maybe
visibility into your
correct. Maybe it was a large compliance expense because you were building policies and procedures and now they're done.
Right.
Or, maybe you depreciated, because a lot of assets you can depreciate one time that whole year. So, maybe the underwriter overlooked that and you knew, yes, I had this large depreciation. That's not going to happen. I took advantage of this. Granted, those lenders are going to, if they can't spot depreciation and back it out, then you just need to find another banker. But yes, those are ChatGPT. I think did a good job on that.
That's good.
And they also followed it up with these questions: help business owners make informed decisions when financing commercial property purchase. Yeah. So.
Nice.
I think everybody looking for commercial loans should probably ask ChatGPT that question. What they need to ask.
Go there first, then talk to the bank. It might
You'll be
speed
ready.
Things along.
Yeah.
All right, great. Cool.